Konnichiwa and welcome back. If you were watching the Japanese markets in December, you saw a high-tech explosion. The Nikkei 225 ended the year on a tear, driven by one massive theme: the hardware renaissance. From mining the metals needed for batteries to building the robots that build the cars, investors poured money into the companies that make the physical world work. We saw major product launches, huge recycling pivots, and the Buffett effect kicking in again. In this video, we are counting down the top 10 best-performing stocks on the Nikkei 225 for December 2025. These are the companies that powered Japan's year-end rally. Let's see who made the list.
Number 10, Mitsui & Co. plus 12%.
Kicking off our countdown at number 10 is the trading giant Mitsui & Co., up 12%. December was a busy month for Mitsui. On December 4th, they held their Investor Day, where they laid out a bullish roadmap for 2026. But the real excitement came from the Buffett buzz. Following reports that Berkshire Hathaway had increased its stake earlier in the fall, speculation mounted in December that Warren Buffett's successor might be looking to buy even more. Add in a steady share buyback program, and you have a solid double-digit gain. Number 9, Renesas Electronics, plus 16%. At number 9 is the chip maker, Renesas Electronics, climbing 16%. On December 22nd, Renesas dropped a bombshell product announcement. They unveiled their new R-Car Gen 5 platform, the industry's first automotive chip built on a 3-nanometer process. This is the brain that will power the next generation of self-driving cars. Investors loved the technological leap, and the stock surged as the company positioned itself ahead of its global rivals. Number 8, Sumco Corp, plus 18%. Number 8 is the silicon wafer manufacturer Sumco, up 18%. Sumco had a rough earnings report in November, but in December the narrative flipped. The catalyst? Artificial intelligence. Management confirmed that demand for high-end wafers used in AI chips now accounts for 20% of their revenue and is growing fast. The market decided that the bottom is in, and investors piled back in to catch the AI wave before it crests. Number 7, Mitsubishi Materials, plus an 18%. At number 7, we have Mitsubishi Materials, also up 18%. This company is completely reinventing itself. In late November and early December, they rolled out a bold strategy to cut their traditional copper smelting by 30% and pivot aggressively toward recycling. They plan to process more e-waste and less raw ore. Investors love a green transition story, especially when it promises higher profit margins in the long run. Number 6, Yaskawa Electric, plus an 18%. Checking in at number 6 is the robotics leader Yaskawa Electric, up 18%. Yaskawa is celebrating its 110th anniversary, but the stock price is looking forward, not back. In December, we saw growing optimism about a recovery in factory automation orders, particularly from China. As one of the world's top robot makers, Yaskawa is the first to benefit when global factories start spending again. Number 5, Screen Holdings, plus 19%. Breaking into the top 5, we have Screen Holdings, up 19%. This is a classic picks and shovels play for the semiconductor industry. Screen makes the cleaning equipment that is essential for making chips. With forecasts showing the global chip equipment market growing to over $116 billion in 2025, Screen is riding the industry-wide CapEx boom. It was a month of steady accumulation by institutional investors, betting on a big 2026. Number 4, Mercari, plus 20%. At number 4 is the e-commerce app Mercari, surging 20%. Mercari has been aggressive this year. After launching their new global app in October to let overseas users buy from Japan, December saw the payoff. Reports of strong holiday transaction volumes and cross-border sales helped drive the stock higher. The weak yen is making Japanese second-hand goods a bargain for the rest of the world, and Mercari is the gateway. Number 3, Fanuc, plus 122%. Taking the bronze medal at number 3 is the giant of industrial automation Fanuc, up 22%. Fanuc has been sleeping for a while, but it woke up in December. Despite a slow start to the year, the World Robotics 2025 report released earlier painted a picture of long-term growth. In December, traders bet heavily on a cyclical turnaround. The logic is simple. If you believe the global economy avoids a recession, you buy Fanuc. Number 2, Dowa Holdings, plus 23%. Our runner-up at number 2 is Dowa Holdings, rocketing up 23%. Dowa sits at the perfect intersection of two trends: high metal prices and recycling. They are a major player in extracting precious metals from waste. With gold and copper prices holding firm in December, Dowa's urban mining business looked more profitable than ever. It's an ESG stock that actually makes money from commodities. Number 1, Sumitomo Metal Mining, plus 24%. And finally, the number 1 stock on the Nikkei 225 for December 2025 is Sumitomo Metal Mining, surging 24%. Two massive pieces of news drove this winner. First, on December 22nd, it was announced that their new silicon carbide, SiC, materials were adopted by Shingen for next-gen power chips. That's a huge validation of their tech. Second, they are riding the electric vehicle wave with their collaboration with Toyota on solid-state batteries. High-tech materials plus EV exposure equals the top spot on the leaderboard. So there you have it. Robots, recycling, and next-gen chips. December in Tokyo was all about the hardware that powers the future. Did you buy the dip on Fanuc? Or are you riding the AI wave with Renesas? Let us know in the comments below. And don't forget to like and subscribe for your monthly market updates. Thank you, and see you in the next one.